Welcome back. In the last video, we took our journal entries and we put them into T accounts. Now we're going to take those T accounts and put them into a trial balance. Now, there's not going to be a huge difference between the T accounts and the trial balance because we only have 12 transactions, right? So it's easy for me to see on one page right here what's the balance in cash, what's the balance in equipment. But in a larger company, my T accounts or my ledgers might go on for 100 pages, okay? So then that makes it more of a flip through exercise. So this is a way to really consolidate and condense it, and it's the next step before we get to our financial statements. So our trial balance basically lists everything on, in our case, it'll be one page. If you have a giant company, it might take multiple pages, but it's kind of condensing it down. Okay, so this is our trial balance right here. And it's going to start with an account number. We'll get back to that. The account name, and then whether the ending balance is a debit or credit. All right, this is an either or, guys. You either have an ending debit balance or you have an ending credit balance. You cannot have both. Okay, you got to pick. So for example, cash, if I entered cash here, has an ending debit balance of $22,000. There's nothing in the credit side. I have credit transactions, but I'm summarizing. I'm taking the big and I'm funneling it down and summarizing it. And at the end of the period, I have a debit balance of $22,000 in cash, so I've entered it as a debit balance. Nothing in the credit side for this one. Okay. Let's keep going across, and then we'll do account numbers last. Okay, so next is accounts receivable. My accounts receivable has an ending debit balance of $40,000, so I'm going to enter $40,000 here. All right. As far as order, you should list this in the same order that you would on your, well, we haven't gotten there. The way you list this is you start with your assets, then you go to your liabilities. So kind of the same order as they were in our transaction log. You're going to start with your assets, then your liabilities, then your stock, then your dividends, then your revenue, then your expenses. Okay, and your accounts need to go in that order. That's proper accounting procedure. Okay, alrighty. So continue with our assets. Then we have inventory, and our ending balance was a $30,000 debit. Then we have equipment, and our ending balance was a $310,000 debit. Let me just show you where I'm getting these numbers. Okay. I'm just getting them from the numbers we totaled on our T accounts. All right, now that's it for my assets. I'm going to move to my liabilities. And my first liability is accounts payable, and it has a $271 credit. So I'm going to type in accounts payable, and I'm going to put this on the credit side because it's a credit. That's it for my liabilities. So now I'm going to go with my stock. My stock has a $100,000 credit. And I'm going to go with my dividends. And my dividends have a $31,000 debit. Putting it on the left. Then I've got revenue. And my revenue has a $70,000 credit. Oops. And finally, my expense, which has an $8,000 debit. Okay. And the final step, I have it in here. I had the formulas already in here, but if I didn't, let's assume I didn't. The final step is you add up all your debits, then you add up all your credits. They have to equal, okay? If they don't equal, something's gone wrong and you need to go back and look for it. I would say usually if something goes wrong with mine, the problem was when I transferred my journal entries over to my T accounts. I forgot a debit or a credit somewhere. Is usually how this goes wrong for me. You may end up with a totally different problem. You may end up with no problems at all. You may just be an awesome accountant already, and everything's going to work out fine the first time. But if it doesn't, the first place I'd go and look is make sure that all of the journal entries were transferred over correctly to the T accounts. The second place I'd look is how you added up your T accounts. Did you take your debits and subtract your credits? Take your credits, subtract your debits? Okay, but anyway, let's assume that I don't know yet if I equal, so I'm just going to use my sum function, and I'm going to sum everything up. And then I'm going to right-click and copy, and right-click and paste. Okay, so now my debits are 441,000 and my credits are 441,000. They equal, so I am in good shape. All right, hopefully you're there with me too. And that's going to be it for the trial. Oh, no, we got to do the account numbers. All right. So each account needs to have its own number. The only hard and fast rule is they have to be ascending. Okay, so I could do 1, 2, 3, 4, 5, 6, 7, 8, 9. That would be fine. Generally, when we set up our chart of accounts, which is basically where we say these numbers go with these accounts, we're going to do it a little differently. We generally have somewhere between a 3 to 5 number account number. We're going to do 3, and I'm going to do it like this. I'm going to have all of my assets start with a 1. So cash is going to be 100. Accounts receivable is going to be 110. Inventory is going to be 120. Equipment is going to be 130. Then when I move to my liabilities, I'm going to start with a new numbering sequence, and I'm going to start with 200. Now I'm in my equity section, so in my stock is going to be 300. I'm going to make my dividends 310, and then revenue and expenses are each going to get their own numbering sequences. So I'm going to make revenue 400, and I'm going to make revenue or expenses 500. All right. You're like, why are you making yourself crazy here? All right, here's the reason. It helps if I have dedicated numbering sequences. So if I see an account that I don't recognize and it's account number 150, at least I know it's an asset. I can start there. Okay, so it's the reason that I give a different numbering sequence to assets versus liabilities versus these accounts is so it's easy to pinpoint. These two, when we go to do our journal entries, revenue and expenses, those are going to go on the income statement. Everything else is going on the balance sheet. So by giving revenue and expenses their own numbering sequence, it's really easy for me to pick out what needs to go on my income statement versus what needs to go on my balance sheet. Finally, the reason I have a gap is because most likely, unless we are a very small business, we're going to have multiples of each account. So I probably won't have one cash account. I might have 2 cash accounts. I might have one cash account where I pay my suppliers and one cash account where I pay my payroll. If I am a multinational company, I may have one cash account in dollars and one cash account in euros. Maybe I have another cash account in pesos. And those are all different cash accounts, and each of those accounts would need their own number. So I want to leave room so that all of the cash accounts can be together. They can be 100, 101, 102, 103, right? I don't want one cash account to be 100 and one to be 187, right? I want them together. And so that's kind of the thoughts behind this. Remember, the only hard and fast rule is that they have to be ascending, 1, 2, 3, 4, 5. And these do get bigger as they go. Ascending means they get bigger as they go along. But if at some point you're called upon to create a chart of accounts, to create these account numbers, you may want to think about not only what your company needs today, but what it may need as it grows and or changes. Okay, that's it for trial balance. We balance, so we're happy, happy, happy. And in the next video, we're going to take this trial balance, and you and me, we're making financial statements. All right, woo, see you there.